Is infinite banking a safe harbor for taxes? Did you know that you can use your infinite banking policy to save taxes with IRS Tax Code Section 7702? Let me ask you a question. Whenever you think about any investment, what is the first thing that comes in your mind? You're right, it's about taxes, right? So, we are going to talk about IRS Tax Code Section 7702, which defines what you can do and what you cannot do with a life insurance policy. Hi, I'm Sunny Mitra, founder of Bright Horizon Wealth. We teach entrepreneurs and go-getters like you how to own their financial future with the concept of infinite banking. If you are new here, please subscribe to our YouTube channel and hit the notifications bell so that you are notified when we upload new videos. You must have noticed that my videos are always very much down to earth. They are easy to understand even for someone who is not financially savvy. My viewers always compliment me for this. Every time I ask someone, what do you like in my YouTube videos or in my masterclass, I always get the same answer. Your videos are different. They are easy to understand. They are not full of technical jargon. That is why we like them so much. But today I'm in a serious mood and want to talk to you about some basic things about infinite banking. So today's video is going to be a little bit boring, but I think it's my responsibility to my viewers to also divulge the technical aspects of a whole life policy, without which the whole story will remain incomplete. So please bear with me. At the end of the video, you will come out a winner. You will know the exact reason as to why you should even consider getting into the infinite banking concept. Like they say, if you have a why, you will find a how. I promise you will be happy at the end that you invested your time with me today for this short video. The knowledge of tax code before buying an insurance policy is indispensable. According to irs.gov, life insurance policy is a safe harbor with IRS Tax Code Section 7702. So the question is, what is this Tax Code Section 7702? This is how the irs.gov website defines it. The Section 7702A provides that a life insurance contract is a modified endowment contract, MAC for short, if the contract is entered into on or after June 21st, 1988 and fails to meet the 7th pay test or is received in exchange for a contract which is a MAC. Now the question is, what is a MAC in a whole life policy? A modified endowment contract is a tax qualification of a life insurance policy whose cumulative premiums exceed federal tax law limits. The taxation structure and IRS policy classification changes after a life insurance policy has morphed into a modified endowment contract. How is a MAC calculated? To determine if a contract is a MAC, a premium limit is set. This limit, which is referred to as a 7th pay limit or MAC limit, is based on the annual premium that would pay up the policy after the payment of 7 level annual premiums. That means you can pay up to $1,000 in premium each year without triggering MAC status. Going back to the tax code section, what is the 7th pay test? The 7th pay test determines whether the total amount of premiums paid into a life insurance policy within the first 7 years is more than what was required to have the policy considered paid up in 7 years. Now the question is, why do they call it a safe harbor? In general, under the proposed safe harbor, the service would not challenge the qualification of a contract as a life insurance contract under section number 7702 or assert that a contract is a MAC under section number 7702A, provided the contract satisfies the requirements of those provisions under all of the age 100 testing methodologies of section 3.02 of this notice. What is Section 7702? According to Investopedia, Section 7702 of the U.S. Internal Revenue Service Tax Code defines what the federal government considers to be a legitimate life insurance contract and is used to determine how the proceeds are taxed. The proceeds of policies that do not meet the government's definition are taxable as ordinary income. Proceeds from genuine life insurance contracts are tax advantaged. Sometimes people ask me, can you write off life insurance on taxes? As an individual, when you pay life insurance premiums, they are not deductible on your income tax return. However, if you are a business owner and you pay life insurance premiums on behalf of your employees, your expenses may be deductible. One more last thing, you would like to know that what is TAMRA, Technical and Miscellaneous Revenue Act of 1988, in short form TAMRA. Income taxation of cash value life insurance, any policy loans, dividends or partial withdrawals of funds are treated by the IRS for income tax purposes on a last in, first out basis. So that's about it for today. I know there was a lot of heavy stuff, but don't you think that now you have the big why as to why should you even consider getting into an infinite banking policy? If you are thinking about using your policy to finance other things, we have a free book called Infinity Banking Secrets, where we share different ideas on how you can utilize your whole life insurance policy. So definitely check out the link below and visit our masterclass. If you like this video, let us know by liking it and leaving a comment for us. Make sure you share with your friends and family and subscribe to our channel. And remember to own your tomorrow by converting liabilities into assets.